Let's talk about whether or not these oil markets now are going to get some semblance of stabilization given what's happening with OPEC, its partner countries like Russia, and possibly President Trump weighing into the discussion as well.
I actually do think so. I think the pressure is so extraordinary on everybody, not just the Saudis and the Russians, but the entire crew of OPEC and even U.S. shale. Now, we know U.S. shale production is collapsing just on its own weight. Monday, we're going to get a teleconference with not just OPEC, but any oil producer of substance that wants to dial in, because everyone now knows that they need to cut. The question is who's going to have to really step up and lead the way. Russian, Saudis, they don't want to lose market share to others. So you got to throw in the politics, but with the economic reality that none of these producers can really survive with oil around $20, $25. So I do expect something, but we also have to remember that the drop in demand has been so dramatic that even if they call it 10 million barrels a day, which Trump alluded to in his tweet, that may not even be enough, considering that demand has fallen even more than that.
So it's interesting. That was going to be my next point, and you kind of broached the subject, so let's go down it. Is there a level in the energy market that you could see? I mean, this is not about shock and awe right now. This is about trying to rebalance a market that's been in decline for quite some time. Is there a number out there that these global production people should be thinking about with regard to how many barrels per day they cut? If it's not 10 million, what number is it?
Well, the 10 million, that line has been drawn now in the sand by Trump, according to his conversations with the Saudis and the Russians. So it's got to be at least 10 in order to sustain oil here now at around $25, 26, versus where it was just yesterday morning. Now, if they can step up and do even more to better balance the market, then you have the potential of getting back to $30 here. Plus.
You go ahead, Peter.
Yeah, plus, I mean, because I think what's also important here is that it's also and it's unfortunate for us, but U.S. shale is unfortunately getting wiped out here. So we are setting the stage in the next couple of years when the economy starts to resume growth again for much higher oil prices because of the demand destruction. I'm sorry, because of the production destruction we are in the midst of seeing. So it's just a question of when we get there.
So there's a rebalancing effort that's going to take place for sure. Is there we talked about the millions of barrels per day to be cut to balance things. Is there an equilibrium price, if there is such a thing, that gets all of these countries that all have different break-even points of producing oil to kind of agree that this is a good level for the market to be at?
Well, it's tough to say because we don't know how much longer the demand side will continue to be destroyed. I think if the global economy starts to open up again in May and June, well, then we can better answer that question because we'll also know what the supply response is. But at least yesterday, we got some sense that the market would be happy with at least 10 million, not just from a number standpoint, but because then we realized that the Saudis and the Russians who went the opposite way and said, yeah, we're just going to pump all out because we want market share, I think the realization that they're just destroying themselves was enough to see a bottom in oil. But it's a very difficult question to answer again until we have a sense of where the demand side sort of settles out when things start to reopen again.